Good morning, traders. It's 8:04 a.m. on Monday, the 19th of June, 2017. Thanks for joining me here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance is bullish on the equities this morning. The U.S. indices are strong with a gap up in the S&P and several others. We're looking at the Euro Stocks 50 leading the pack, up 1.22%, followed by the DAX at 1.07, then the Nasdaq, the Dow, and the S&P. Crude oil stronger this morning as well at 45.05. Crude has gotten as high as 45.28. However, it also dropped as low as 44.68 in the Globex session. Crude is trading inside of the prior of Friday's pit session. The laggard today is gold. Gold is down $5.10 at 0.41%, followed by the yen, the euro bond, and the 10-year Treasury note. The bond is up 3 ticks. So overall, the market stance is risk on at the moment. As far as what's going on in the news, we're seeing that there was another terrorist incident in London, an attack on worshippers coming out of a mosque. Then there's Brexit negotiations. This is important today. David Davis of the UK's is the UK's Brexit minister. He starts his discussions with Michael Barnier in Brussels. So there's a conference on that. There's a press conference on that could be important. As many of you have probably heard, Amazon's buying Whole Foods, will be cutting costs and cashiers, replacing them with technology. Lockheed Martin is in the final stages of negotiating a $37 billion contract for the F-35 combat jet. And Trump is meeting with tech CEOs to discuss how the government can cut its IT costs. Okay? So as far as what we're looking at going forward for today in the calendar, there's not much on deck today. We already had the Eurozone construction output month on month, and we don't have any speakers. Again, the Brexit talks start at noon Eastern. And then looking at the week, there's nothing else today. Looking at the week, tomorrow we have German PPI, we have Eurozone and U.S. current account. We also have Fed's Evans, Rosengren, Fisher and Kaplan, ECB's Costa. So mostly tomorrow, central bank speakers, nothing of real consequence on calendar. Wednesday is the same. The UK has its PSMB, and the U.S. has existing home sales. Thursday, we have U.S. FHFA housing prices and the leading index. The Eurozone has a consumer confidence and the ECB's bulletin. And then on Friday, we get the German Eurozone manufacturing PMI and services. And in the U.S., we get new home sales, manufacturing PMI and services PMI, Fed's Bullard and Mester. So this is the calendar for the week. As you can tell already, the calendar is really light across the week. I mean, we have some key figures here and there, existing home sales and so on, but overall the week does not carry any really significant releases. So this week is not likely to be driven by calendar events. It's likely to be driven by either geopolitical events or technical events. So that's where we stand as we go through this week. Looking at Friday, the primary idea for Friday, the primary expectation for Friday, was for the market to get responsive. We were opening during the trader bite. We were opening right on the edge of the prior day's range. We're looking for the market to get responsive into the 28, 27 area. looking for the market to form a base, but the major track is for the market to push through the overnight high and then settle somewhere back into the opening swing. That didn't happen on Friday. The secondary hypothesis was for the market to be initiative to later come to find sellers, later come back to the prior day's range, find a base, and then become initiative again. That didn't happen either. On the third hypothesis, we're looking for the market to become responsive, and that's basically what took over. However, the expectation was for the market to find its sellers before it sells off, to move up in an open swing before it finds its drive down, the sellers, and I expected the market to push all the way down to a 24.19 half or so before the bounce, and then the bounce was expected in the afternoon. It's basically what happened without the push up. The market basically was responsive right off the get go. This is what the trade looked like on Friday. There's a tiny little push up. You see it there. But the expectation was for the market to poke through, make sure there aren't buyers above the prior day's range, and then start to have its initiative move down. So there was no trade there. Unfortunately, it just happened so quickly. It opened and it was immediately on the sell side. There wasn't a lot of fever, or there wasn't a huge push. The first push down didn't have very much delta, didn't have very much volume. The second push down did, and then the market extended its initiative rotation down, or impulsive rotation down, and stopped one tick basically, or actually a couple ticks from our target at 1975. It found a base, and then we get the run up on the close as expected. The market almost went neutral on Friday. It didn't quite get to the IB high to push it. It ran out of time. It ended up doing so right after the reopen, but the way the market closed was very bullish. Remember, Friday was quad witching, so there was a lot of kind of sideways action in here. Uh, uh, just chopping around. But overall, it did perform what it was expected to on the third hypothesis: sellers early, buyers later, and we ended up with a normal variation day with the market closing above the VPOC, and the expectation was for it to continue higher, and it did. The overnight high is 34.40, 24.40 and a quarter, 24.40 and a quarter above, and we're currently trading at 24.38.75. So overall, this was just a kind of a cup type of formation, or a handle, depending on your time frame, and it does have a bullish connotations to the upside. Okay, here's what's happened on the overnight. So this is the overnight right here. This is the Globex session. This was Friday's session. And you can see that we have one of these, right? One of these kinds of formations. The pivot's around 36, and the market went right to it, sat sideways for the Asian session, and then went straight up to make the high. And what we've done is we've pulled back to the mid and are chopping around and consolidating near highs. It looks like it's got it potentially has the fuel to keep going higher. So we're watching this morning. I'm watching this morning to see if the market's able to get responsive early on, or it's not. We're right up against the all-time high here of 24.43.50. It's just a stone's throw away, just 3 points above the overnight high. So overall, pretty bullish action yet again. It gets really boring with these assessments every morning. To see that we sold off, fantastic. We get a little bit of volatility. Vol pushes to 12 or so, and then it comes cratering down to 10 and then 9 before the next rotation. So pretty boring overall action. Here's what we did last week. Last week was an inside week We're still one time framing up. So you see a higher low, higher low, higher low, and higher low. We're the time framing on the week is fairly bullish. Last week we had a lower high, higher low, right? So we're compressing a little bit going into the summer months. I believe here in Chicago, school ends tomorrow. Tomorrow's the last day of public school, and the summer holidays start on Wednesday. So we're starting to get into the summer trading period. But overall, the market's been fairly bullish since the Trump news from back here. It's recovered quite handily here and is continuing to be bullish. We're very, very, very much accustomed to this kind of behavior now from the indices. Just buy the sell off pretty much every time so far. So that's where we stand. We finished in the middle of the range last week. We finished below the key balance area above at 24.36, 75.37. And we finished above the point of control for the week. We're right in the middle. And this morning we pushed to the upside. So that's where we stand right now. We're in a consolidation week last week. We're looking for how that's going to play out coming into this week. So which way is it likely to go? Clearly, up is easier. Here's Monday. Monday, just a sideways day. Tuesday, we gapped up, pulled back, and finished higher. Wednesday, we opened up high and sold off, and then ended up coming right back. Thursday, we opened down low. Thursday, we opened somewhere in here, and we pushed back into Wednesday's range, the 2 days of balance right here, and then we came right off on Friday, and we went right back in. And then now we're back up here. We're trading up here. So you can see that the market's very much attracted to this upper distribution, seeing value in those prices and seeing that the prices are fairly cheap. You can see these thin trading areas. Let me do a better line here. These thin trading areas right below that 24.18, 24.20 line, the market's finding this cheap, right? And that's how it's auctioning right now. It's finding these prices too cheap, and it's pushing back, and it's looking for balance initially in the 24.30 area, but more so in the 24.37 area currently. So anything below 24.18, 24.20 is seen as cheap by the market because we see participants hopping in and buying it back up real quick. You see that on Monday, you see that on Thursday, and then on Friday it didn't even try. And it as soon as it starts to sell off, it finds its buyers and rotates up. Okay, so that's where we stand right now. As far as what we're looking for the session this morning, we're opening in a gap right there, and the expected the expected participation, given that if we extend this forward here, this is the composite, right, that we've been working with. We're opening on the higher end of the composite. We're above the composite value, and the expectation in a standard auction, the expectation is for it to open auction, responsive, work towards the gap. We have basically a double top here, work towards the gap, and then find a base, and then start to move up, and then finish in the middle. It is Monday. I'm not expecting very much range, probably somewhere between 7 and 8 points tops. That puts us at 33 to 41 or so. So I'm expecting a breach of the overnight high, and it did not trade into the prior day's range at all in the overnight session at all. The overnight low is 32.75. The prior day's close is right in here at 31.5. So it did not breach at all. But I'm expecting it to become a little bit responsive. Chances are we'll leave a gap zone right there. We'll find a base sooner than the prior day's range, and then we start to rotate up, the bigger move being the impulsive move higher. That's hypo one. Hypo two, hypo two, we find ourselves unable to go lower, and we start to explore higher. We push into the all-time high, and then we end up consolidating and finishing somewhere just below it. That's what I'm looking for hypo two. This is initiative. This is an initiative move away from value. And it's got a fair amount of, this profile that we're looking at here has a fair amount of volume in it, and it's got what it needs to keep going higher, and it's very much attracted. It's been very much attracted to the to these 2 days of consolidation. These 2 days have a point of control at about 23, 24, 35, 50, and we're above that. So I expect this to form a pretty good base. The tertiary hypothesis is it pushes up early, finds its sellers, and then it gets aggressive, and we're looking for sellers down into the point of control 24.30 and a quarter. Remember, the point of control moved down from 35.50 to this 30 and a quarter on Friday. Looking for it to push down into there, consolidate, look for a push down into 27, and then find its buyers later on to finish around 35, 36. This is not likely given that it's a Monday, but that's our third hypothesis for the day. Now remember, we create these plans not because we're trying to predict the market, not because I want to be right, not because I want to predict things and only trade from that bias. We're creating these plans so that we become aware of what's around us. What are the pieces that are moving around us, and what are the targets, what's the potential support resistance, so that when we're in the trade, we're not doing that research, we're not digging around in different time frames. We've done all that work ahead of time, and it's just a function of what comes next. Just remember, you're like a fighter pilot. You get your briefing, you go out there, you get into the battlefield, and then you respond according to conditions. And the conditions can only be dictated by the market. They cannot be predicted by me. And so that's our goal by doing this. We're here to ultimately figure out what are the potential moves, and then to align ourselves with the market heading into those moves. That's all we're doing. Okay. Good luck today, and take care.